Let's begin by talking about the Indian rupee, which has hit a record low in trade today, and it has reached 84.4 against the US dollar. This makes it a 1.5% drop in this year itself. But India is not alone. We've seen other regional currencies like the Chinese yuan also weaken against the US dollar. Of course, it can be attributed to Donald Trump's victory in the presidential elections. But there could be other reasons, and perhaps now we can expect more interventions from the Reserve Bank of India. What will the central bank do to stem the fall of the Indian rupee? To discuss the reasons, the implications of a weakened Indian rupee, let's get perspective. Naveen Mathur, Director of Commodities and Currencies at the Anand, Rathi Group and Gift City IFSC, joining us along with Arnab, the Global Macro Strategist for EMEA at Invesco. Gentlemen, a warm welcome to India Tonight on ET Now. Mr. Mathur, first to you. You tell us, from your perspective, how much of this pressure on the Indian rupee is because of the fear of Trump raising tariffs on China. If you can explain to us the correlation, if you see it that way.
Thank you very much, and good evening to you, Vikram, and the viewers. We definitely put it across, attributed to the depreciation in yuan, particularly with the election win by President-elect Donald Trump. I think it's more to do with the tariffs there and therefore the yuan depreciation. The further point to note is that India and China compete for exports on various goods, and therefore, to a large extent, I would say it is also an implication with respect to the Chinese yuan depreciating, and India wants to be competitive in the export market. Therefore, the rupee also is depreciating. RBI definitely would intervene. They would not like the rupee to depreciate to a large extent against the dollar. So there definitely would be intervention. How soon and what would be the quantum is something anybody's guess. The second aspect on the depreciation is definitely the outflow of the foreign portfolio investors' money. We have seen the October month around $11 billion have been taken out. The outflows have been to an extent of $11 billion last month. And November till date, approximately $2.5 billion have been on the outflow by the FPIs from the equity markets. The other factor, Vikram, also needed to be seen is that the policies of the new administration in the US might be having a kind of an inflationary concerns, and therefore the Federal Reserve and the central bank in the US would not be too much inclined to cut the interest rates, as was seen few months earlier before the election results, that the Fed would like to be now dovish and can be 50 to 75 basis point cuts by March of the next year. I think that would be a little outlandish now to think about on the stance of the Federal Reserve. So therefore, the dollar depreciation to a large extent is out of question, which might help rupee to appreciate. On the other side, we might see hawkish comments coming in with respect to the dollar, the Federal Reserve, because of all the good reasons of the tax cuts, the consumption, which might take
So let me pick on those 2 points. Indeed, Mr. Mathur, most of these points we are going to delve into a little more detail. Arnab, so much is being said about persistent outflows of foreign funds. Is it the cause, you think, or the effect of the rupee is depreciating? And of course, how much is it because, like Mr. Mathur is pointing out, the hawkish stance of the Fed, the probability that the Fed will now not rush into more rate cuts, either in quantum or in pace?
Okay, well, first, thanks very much for having me. Very good to be here. Look, I think on the point of the rupee depreciating because of outflows and so on, I think you're right. It's a bit of cause and effect. With currency markets in particular, lots of different things are going on at any given time. And Mr. Mathur, I think, has emphasized, combination of U.S. and let's say India and China or Asia specific factors. I think we have to say there's broad-based dollar strength, right? When the U.S. has imposed tariffs in the past, the dollar has strengthened and other currencies have weakened, and that's exactly what the theory would tell you. And I think that's a big part of what's going on in the global currency markets, right? sort of systematic. It's not specific. Part of it, an important part of it, is not specific to India. And I think that's just the tariffs alone. And then I agree that the fiscal policy, as well as the immigration plans of the U.S. Under President-elect Trump, would speak to a higher pressure, hotter U.S. economy. Right, the labor market would be tighter than otherwise if he's successful in deporting millions of illegal immigrants, and probably more likely in choking off the flow of new immigrants through the southern border. Right, so the labor market would be tighter, and that probably implies that the Fed would ease maybe significantly less than had been expected, and may even tighten at some point, sooner than otherwise. Right, and I think that's what's starting to be priced into the money market curve in the U.S. And so the entire complex of assets and currencies throughout the world is responding to all of these changes that have suddenly been put on the table by, I think what has to be said was a kind of a surprise win by Trump, much stronger mandate than expected, right? Because he won the popular vote. The polls were dead even, but the prediction markets predicted a fairly strong win, and that's what we got. And it looks very likely that he'll control not just the Senate, but the House, right? So-called trifecta. Right. He's going to be in a good position to implement a lot of these policies.
One would imagine that a lot of it would get factored in because as we moved closer to the election result, much of it, at least from the market experts we were speaking to, were expecting a Trump victory. But of course, it was a very close call. But typically, when the rupee loses ground, Mr. Mathur, you've said typically the Reserve Bank of India intervenes by selling dollars just to cushion the rupee from further depreciation. We have to see how many more interventions can take place now in the future so that the risk of eroding our forex reserve stands, but how much the RBI is going to move. Already we are hearing the buzz around what they've done so far. But tell me about crude oil prices as well, since you actively track the commodities universe. Our oil import bill in India is historically one of the largest. How much is that likely to impact the Indian rupee? Because already OPEC Plus has pushed back those plans to boost oil production.
Vikram, you are exactly on the point. We have seen the fifth consecutive week of the interventions by RBI we are seeing the numbers as far as the foreign exchange reserve numbers are concerned. So we are currently at around $682 billion worth of the foreign exchange reserves currently, which touched highs of $700+ billion also. So it seems like that to hold on to the decline or the depreciation of rupee against the dollar, the RBI did intervene, but they didn't intervene to a large extent very aggressively as used to be the case earlier because of maintaining the export competitiveness. The flip side of this is definitely the imports. We import about 70 to 75% of our oil consumption. Now, with the policies historically and particularly in the previous Trump regime, there have been the production surge for the crude oil in the US. So net importer, as the US has been for decades or the centuries, became the exporter of the crude oil. I think with that particular policy continuing and the technological advancement which the US has undergone in the recent past for the shale oil and the gas, I think the export orientation would be something to watch out, which might keep the oil prices in check. The other aspect to be seen, Vikram, is also the Middle East tensions. If something positive comes in, ceasefire comes in, some kind of stability comes into the Middle East, you might see the crude oil prices stabilizing at around $70 to $75. I'm talking about both the Brent and the WTI.
And will that stem the fall of the... Mr. Mathur, will that stem the fall of the Indian rupee? Sorry for interjecting, but I was just wondering.
I would say it would actually counterbalance the depreciation of rupee. It means we have not depreciated to a large extent the way the Chinese yuan and the other currencies have depreciated. So if you see on week, we are 0.4% on the depreciation side. And you rightly said at the start of the show itself, 1.5% on year-to-year basis. So I think that is something which is fundamentally logical for the rupee to depreciate with all the factors which we are seeing.
Yes, we're talking about. But of course, talking about oil, there is a view that Trump's victory is going to lead to higher American oil production. Not sure if that is going to happen because there are concerns within the shale industry in the US. But also in a connected piece, Arnab Das, I was reading a report that says that India's fuel exports to Europe, they've really risen this year in a way that it makes India the biggest exporter of refined oil products to the European Union. The reason, the report says, is because Indian refiners are capitalizing on a loophole in the EU sanctions against Russia. So one would imagine this being a net positive for India. But what do you think? And can that really help keep the rupee's strength? Because many believe that it's our structural trade imbalance and not enough diversification in Indian exports that is actually also one of the big reasons why we have the pressure on the Indian rupee.
Yeah, look, I think there's an interesting thing going on in the markets, right? That in the sense that China, which has a huge surplus, has seen current account and trade surplus, has seen pressure on the currency, and a lot of deficit currencies have. That's why I say this is systematic. It's about dollar strength, perhaps more than rupee or renminbi weakness per se, specific to those currencies. Now, on the oil export and the general trade balance in India, I would say I think the re-export of Russian crude oil as refined oil through that loophole, as you mentioned, is an important factor. And I think, pretty much everyone in the world that matters knows about this. And I think the United States and Europe have looked the other way because it's helped to keep oil prices in the West lower than they would otherwise be, and sort of mitigated the segmentation of the oil market that's occurred because of the sanctions and the G7 effort to cap Russia's oil export prices. I think another important factor that is somewhat undersung is that India's services exports have exploded, right? Services exports probably running over $30 billion a month now, 30 billion the last time I looked. So I think, the current account deficit in India,
Yes.
India will continue to be a deficit country, but it's a much smaller deficit than it has been in the past, and it's overfinanced by FDI.
Yes.
So I think the portfolio outflows make a difference at the margin, but don't really change the story.
Right. Mr. Mathur, in 2022, the finance minister had mentioned that the rupee is not falling. It's the dollar that is strengthening. Now, does that argument hold sway right now? Is it a legitimate way of looking at developments in the currency markets, this kind of fall that we are seeing of the Indian rupee against the US dollar?
Vikram, too much of things have happened in between 2022 and 2024. Not many factors have taken, I would say, a kind of a geopolitical shape. The Russia-Ukraine factor, the Middle East on the boil, everything has led. What I can still say is that that statement still partially holds true because if you see the statistics and the analysis of the emerging market currencies versus the dollar, we are far better off. The India's place in the global standing in terms of the financial markets and other place is quite, I would say, significant and strong than what we were a few years earlier. So I would say to kind of an extent, it continues to hold that particular statement because of all the good reasons which we have built for the country, be it the financial standing, be it our reserves, be it the fiscal deficit, be it the government policies, the reforms, and the stable government for the last 3 terms. So I think all that is positive for rupee. It is the fact. It is actually the factors which are impacting the rupee on the downside, and I think it is good to an extent too for the exports to be competitive against the other markets, so other countries. So I think the statement still holds good.
So you're suggesting that it's okay for the Indian rupee to depreciate just for the sake of competitiveness as well when it comes to our entire trade scenario. But when you talk about companies, and we're talking about implications over here, Arnab Das, companies that count on foreign borrowing, if the rupee weakens from this point onwards, will they find it more difficult to get credit? And will that existing debt burden get more difficult to service with a weaker rupee as well? What are the implications for industry typically? Because there are certain industries like auto or electronics or even pharma, they are heavily import driven. So all these industries would get affected, don't you think?
Absolutely. I think companies that borrow abroad have to factor this in the possibility of adverse currency movements when they make those decisions. And countries as a whole, as well, have to, in their thinking about the balance of payments, in the case of India, the Reserve Bank's actions. I'm speaking to you from Mexico City right now, and Mexico is the most heavily integrated economy with the U.S. in the world. And the Mexican peso has come under a lot of pressure, and Mexican companies borrow a lot in dollars, including the national oil company. So some of those large borrowing companies in India, Mexico, other places, they will have hedged at least part of their currency exposure, and many of them will have export revenues, so they won't be as affected. The challenge, I think, will be greater for companies that have domestic revenues and foreign borrowings as a main sort of mismatch in their balance sheets. I don't think, as Mr. Mathur was saying, India is in a relatively good position. There hasn't been that much currency depreciation. I don't think this will be that much of a challenge for India at a macro level. There may not be, here or there, this company, that company, very specific examples or difficulties. But I think the general story in India is pretty strong. I think maybe the currency is in a relatively good place. Maybe the equity market is a bit rich, compared to other countries and compared to the history of the stock market in India itself. But I think as you were suggesting about the foreign minister's comments at the beginning of our spot here, India is in a relatively good position. I would say pretty well hedged,
right,
with regards to Trump or some other outcome in the U.S.
Sure. Well, aside from that, and of course, the External Affairs Minister has gone on record saying that we need not be nervous about a Trump victory, and we'll delve into that a little later in the show. But since we have you, Mr. Mathur, and you track the commodities universe, besides oil, our big import is gold. Now, gold prices have been hitting the roof. How much more expensive do you see gold become if the rupee remains under pressure against the dollar?
Vikram, I just want to continue with the earlier conversation on the rupee and the effect on the Indian companies with the ECB borrowing.
Sure.
It helps us to bring the Made in India concept. Means your dependency on the imports would not be too great, and I think the entrepreneurs and the organizations would think about building the infrastructure, the impetus to the make in India imports. The commodity space, I would say the dollar appreciation has definitely weakened the dollar part of the commodities. The gold, which was hovering at around $2,800 some weeks earlier, is now at around $2,600, $2,635. I think the commodities in terms of dollars would become cheaper of the dollar index appreciation, and therefore we see that the commodities would realign to the strategy of the incoming administration in the US. Many things are anyway discounted in, but that was a surprise victory. It was an edge-to-edge kind of polls in the US. But it's good for India that the prices of the commodities would now be stabilizing and would be neutral to the downside than on the upside. So I think the spot gold, as you see, $2,645, all of it is positive for the commodity landscape on the downside for the people
Yes.
who use commodities as raw material. So I think it's positive.
Right.
I would always say that in spite of the commodities on the downside, Vikram, one must have an exposure to the bullion as a risk-averse asset class,
Yes.
and right time for a staggered investments
Sure.
in India
Also,
or anywhere in the
before
world
I
to
let
be
you
on
go,
the
Mr.
gold
Mathur,
as
I
an
need
asset.
to know from you, in the near term, how do you reckon the US dollar Indian rupee relationship to really pan out? What levels do you see them range between?
Vikram, the last week, I think on the Thursday or Wednesday when we had a call on the show,
Yes.
I said about 83.50, 84 levels, 84.50 levels. The downside definitely is 83.50. We don't see the rupee to appreciate immediately beyond those levels. 83.50 is also a little far-fetched. 84, 83.75 or so on the appreciative side, but 85 is something which one may look out for. I'm rechanging. I'm actually revisiting the number at 84.50 to 85 now,
Right.
but doesn't seem to be beyond 85 in
Fair
the
enough.
immediate future.
Well, we'll be watching that space very closely and the impact it has on inflation, because that's the other moving piece for the Indian economy, and a weaker rupee, how that is going to impact our inflation scenario for the kind of imports that we do bring in. It's something that the RBI would be worried about. They have mentioned it from time to time. And here I am addressing that issue here on India Tonight as well. But for the moment, let me thank both of you, gentlemen, Arnab Das, Mr. Mathur. Thank you very much for joining us with your perspective on the show this evening.
If you like this video, then like, share and subscribe to ET Now.